Today we discuss guarantor home loans. By the end of this video, you're going to know everything you need to know about guarantor home loans. From the top, Nathan, what are the requirements?
The first thing is that the guarantor needs to be immediate family. So your parents, siblings, and grandparents all count as eligible participants that can be guarantees. In some cases, uncles and aunties, depending on your relationship with them, can also count. The property also needs to be located in Australia. So we do get a lot of instances where we have clients in New Zealand who say their parents live there and they'd be happy to go guarantor. Unfortunately, in this instance, we can't take overseas properties. So the properties do need to be located in Australia. There also needs to be equity in the property. So if your parents have owned the property or the guarantor that's eligible to participate as a guarantee, once they put their property up and they've owned their property for a fair period of time, chances are they'll have enough equity in it. If they've just purchased a property and they put down minimal deposit, in a lot of cases, they actually won't have enough equity to be eligible to guarantee and do the loan. Now, the other thing you need to also be aware of, some lenders require the guarantor to be working. Now, this isn't the case for all lenders, but in a lot of cases, the banks want to see the guarantors working. And this is purely because they don't want to get the guarantor in a situation where they're putting up their family home, they're potentially risking that family home. And if there was a situation where the guarantee was called, they don't want to be kicking out retirees from their homes. Now, this once again is very bank specific. Some banks are very hard and fast about this rule and say if the guarantors aren't working, you absolutely can't get this in place. In other instances, we've had guarantees in place for clients that have had their parents being retired on the pension. So once again, it pays to work with a mortgage broker like ourselves, where we can look into the nitty gritty, because if you just go to your bank, they might say no, and you don't think you actually qualify, whereas there is a bunch of options that you might actually be able to do. So something to be aware of. Now, guarantors that are unacceptable are friends, work associates, previous spouse or previous de facto partners, and unrelated people that have no relationship with you whatsoever. So something to be very aware of. Josh, what do you see with guarantors needing to show savings? Is this something that you need to be aware of as a guarantor? Do I need to have a deposit saved up, or can I lend 100% of the property covering all fees?
And primarily, you won't need to show any savings. However, there are a few lenders that will require 5%, and that's saved over a 3-month period. But by and large, it's not a requirement of lenders. The most important thing with a guarantor home loan is it, in actual fact, helps you avoid the deposit requirement altogether. So guarantor home loan, what it does really well is it allows you to buy without a deposit, but what it doesn't do is it won't increase your borrowing power. So your borrowing power remains the same whether you have a guarantor or don't. A guarantor won't contribute and allow you to borrow more. In short, it allows you to avoid the deposit altogether, saving you years in having to save up a deposit. And Nathan, what if you've owned a property before? Are you eligible to have a guarantor home loan?
Good thing is, if you don't own any properties at the moment, you absolutely do qualify for a guarantor loan. So it's not specifically designed for first homeowners only. It's more designed to get people back into the market or into the market for the first time if they haven't. Now, if you own a property at the moment, a lot of lenders are reluctant to help you if you already own a property in buying another property, because they don't want to have guarantors for wealth creation. It's more to help you in the market. Having said that, we have been successful in the past with a client that did own a property and he didn't have enough equity in his existing property to use as a deposit for the next one. So his parents put their hand up and said, we'll go guarantor for the next one. So in a lot of instances, some lenders have very strict policies where if you own a property before or at the moment, you won't qualify. Other lenders are fine. If you own a property at the moment or you've never owned property before, they don't mind. So you can see here, it's all very widespread in terms of what the lenders are looking for. So it pays to work once again with a broker where we can look at the lenders and make sure that you qualify with them. Now, Josh, what happens if you're looking to buy an investment property, you don't own any properties at the moment? Does a guarantor still qualify?
The first investment property, if it's your first home, so you don't own any properties, is generally acceptable. And as Nathan said, each lender has their own view of the world. Nathan, what are the benefits of the guarantor home loan?
Yeah, there's many benefits of the guarantor home loan. The first is that you absolutely need no deposit. So if you have been struggling to build up your deposit, cost of living, rent escalated, you don't actually need a deposit, and you can lend up to 105% of the property value, which means you can cover stamp duty too. Now, you also receive discounts further discounts on the rates that you receive because the guarantor is seen as a lower risk. So the banks are willing to give you better interest rates and discounts off the terms of the loan. Now, you also will save lenders mortgage insurance, which that's thousands of dollars in costs, because in a lot of instances where you don't have a 20% deposit, there would be lenders mortgage insurance applicable. Under the guarantee, there is absolutely no mortgage insurance there. And the guarantee is limited in size. So what that means for the guarantor's property is only going to secure about 20 to 25% of the total purchase price, which means there's a limited amount on the guarantor's exposure.
Now that 20 to 25% guarantee portion will be a 30-year term, meaning that your parents are up for that portion on their property for up to 30 years. But ordinarily, we can remove a guarantee between 3 to 5 years, depending on two factors. One, how quickly you're paying off your mortgage, and two, how quickly your property appreciates in value. The moment it becomes viable is either when your total debt is less than 80% of the value of your home, or up to 90%, where we include mortgage insurance and can remove the guarantor home loan. Ideally, you'd wait until you've got 80% equity, but in some cases, when you have to remove a guarantor quickly, you can do so with mortgage insurance applicable.
And this is where it pays to work with an expert here. Here at Hunter Galloway, we're mortgage brokers and specialize in guarantor home loans. If you're living in Australia and looking for a great mortgage broker, we can help. There's no cost for the service and we deal with people Australia-wide. Simply call us on 1300 088 065 or visit our website huntergalloway.com.au. We'd love to help. Guys, as always, thanks for watching. Leave a comment down below on the next topic you'd like us to talk about. And until next time, we'll see you then.